Hi guys, welcome to another video. So today we'll talk about how should we read financial news. Okay, so what do you mean read financial news? Because we just read it, right? No, because I'm talking about there are really many kind of data and financial news and economic data keep coming up, like long form, PMI, stuff like that. Many, really thousands of them coming on TV, on radio station, on the internet. So how should we treat them? Like, they're really complicated, right? That we give me headache. Okay, so today I'll talk about how and what kind of financial news that we should read for a long-term investment, for a general economy. Okay, so that we really can enjoy the financial news from now on, because we're able to understand what they do and what they kind of affect the economy in general, so that we can make a better decision in stock market or housing markets or whatever markets that you're investing right now. So before that, if you haven't subscribed to my YouTube channel, please subscribe. Please do so right now. And if you haven't liked my Facebook page, please like my Facebook page also. And also I have an IG account called, it's the same name, Gregory C. So if you are really interested in my kind of other lives and because of what am I preparing before the seminars, that's okay. You can enjoy the photos there. So if you have any questions, please leave me your questions in the comment box below. I will reply. I'm really glad to see your questions, and I'm really try to answer your questions as soon as possible. Please like and share this video if you find it useful. Okay, so please subscribe. All right. So how should we read the financial news? Because there are many thousands of data out there on the TV and the radio station. Really confusing, right? So first of all, we really have to understand there are three kinds of economic data coming up in going on in the world. So first of all, there are many of them. Really the most important. They are called coincident data, or they mostly is within the coincident index itself. What does it mean? Those data are kind of the grades, the results of the economy. That's really synchronizes the economy. Okay, so there are more data coming up before that. They're leading indicators. Okay, these are all coincident indicators. Okay, so for beginners, I suggest that you look at the coincident indicators. So you will not earn a lot. You will not make a big chunk of money, but also your risk will be a lot lower. Okay, what are they? So they are GDP, they are long farm, they are CPI, they are PMI. These are all coincident indicators. Okay, so they're leading indicators. So we are not talking about in this video, but I will talk about what not to look at. Okay, they're lagging indicators. Okay, lagging indicators are like kind of average unemployment dates. Okay, that's really lagging, and 1 year debt and credit limitation. Okay, if it is going down, it means that someone is jobless for 1 year or more, even 2 years. Okay, there's some kind of indicators that you shouldn't spend any time looking at, because by looking at those data, if those data are really bad, that means you're confirmed that you are losing money. That's it. Okay, so that's really lacking, right? We shouldn't spend any time looking at those data. You see some people that say that, oh, it's real money, right? We really look at 100% of the data. No, you can't, because in the smartphone world, in today's world, lots of data coming out. The key to success is how you should filter the data, how you should filter the strategies, so you can come up with the strategies that has the best chance of winning. Okay, so looking at the coincident indicators really will give you less risk, but not a lesser return. But at least you know what's going on. So let's do a practice. For example, you really want to know the midterm trends of housing market or the midterm trends of the stock market. What I mean midterm is quarterly, in a quarterly basis. Quarterly basis is 3 to 6 month or even 9 month decisions. Okay, so for example, you can go to investing.com because I've talked about this website in my another video. It's not sponsored again because really people really getting sensitive about sponsorship. Well, I'm no sponsor at all because a good website deserves a shout out, right? So this is a really good good website deserves a shout out because it's like just like a secretary reminding you all the data, all the important data that you can pick on. Because for beginners, you can pick on 2 or even 3 bolts, okay? These really important indicators, okay? For example, next week, you see kind of view data that's pretty important because in the Eurozone, it is announcing CPI and also unemployment rate, right? These are coincident indicators, okay? So for US, people really pay attention to the non-farm data, non-farm payrolls, this once a month, every first Friday of every month, they will announce non-farm payrolls. So why is this extra important? Because this would be the last non-farm data before the Fed interest rate decision coming up in mid-June. Okay, so this is really important. So and also that the trade balance and also the unemployment rate is also will be announced on the same day, every first Friday of every month. So these are all coincident indicators. So I suggest for beginners or not really beginners, for even your experience, but you really don't want to speculate that much, you really have to look at this data. So from now on, you understand when TV pops out, what kind of data, when the internet pops out, what kind of data, or even so, you do not know the result of the data, right? But you know the time, you know the date. So by next Friday, before next Friday, you know the stock market or the housing market will be reacting a little bit towards when we're closer to the date, or even the dates. The data is really devastating. It will affect 3 to 9 months of the housing market or the stock market. So you know that this is the results. It's just like the grades that you get in the final grades that you get in the course in high school and university or in the college. Okay. It's not that, but there's some kind of, but before the non-farm payrolls, there's some kind of indicators that are leading, right? So people are pretty much waiting for that day because something like this one, CB consumer confidence. This is something like if the student is working hard and is studying 6 hours per day for that result, okay? So the result is lagging behind compared to this. This is some kind of some kind of indicators that, oh, the coming up GDP or coming up non-farm will be good because the consumer confidence is high. It's just like that. But the risk of guessing the economy will be good is a lot higher than looking at the coincident indicators. Okay, so obviously enough, I will make another video about the leading index because me personally look at leading indicators. So and waiting for the coincident indicators to announce, to show the result if this is outperforming or underperforming what we expected. So for example, how should we read the news? So for example, now you know non-farm payrolls are important. It's not like the manufacturing is not important, right? But they're like Chicago PMI, stuff like that. But the non-farm payroll is the result, is the final grade of what you have been waiting for, what the US government is doing for the past quarters, okay? So how should we look at that? We look at not previous data, we look at the forecast. The forecast is 183,000 non-farm payrolls. So if the non-farm payrolls is higher than forecast, that by looking at all the leading indicators, right, the market has come to consensus that 183K is the key. So again, you can speculate any other leading indicators before that, but now the 183 is the result, is the expected grade. So I expect the student is getting A minus, okay? So when the result is A plus, then the US dollar will go up, the US stocks will go up, okay? The gold will come back down, and the housing market will go up, is especially for the main cities in the United States. It's just like that. It's just like that. And even all other countries, their currency is packing the US dollar. They will force to make some kind of interest rate decision only because US economy is doing good, right? It's not about, like for example, Hong Kong, right? The HKD is packed with USD. So not that Hong Kong economy is doing good or bad. It's solely because of USD is doing good. So I have to pack with that, and I have to force to raise the interest rate, right? And it also gives us a hint that the coming up mid-June, the Fed decision, will there be a high chance of interest rate hike or not? So this is really about mid, short, long term, okay? It's about everything, about looking at the coincident indicators. So I cannot explain how many of people out there waiting for 1 month just for the non-farm payrolls, okay? More advanced. There's always a ADP non-farm employment that is kind of a smaller scale of a non-farm. It's a kind of a first episode of the official on-farm payroll announcement. Okay, it usually comes out on Wednesday. I'm not sure why this time is Thursday, but again, because this is June, maybe June the 1st is Thursday. But again, this secondary investing.com can help you. So after today, you finally understand what kind of data and which dates you should not have dinner or lunch, or you should pay attention to the internet or the TV that the announcement is coming up. So you will know which dates you will really have to prepare if you kind of in the phase of buying or selling your house, or you are doing in general stock markets, right? Because in general stock markets, you kind of force yourself to make decision at least once every quarter. So this data is really important. And at the end of this video, at least the third advantage is that now you will be looking really good in front of your friends, because you know now, oh, yesterday the non-farm payrolls is pretty bad. Yeah, that's pretty cool, right? So end of the story. Also, please smash the like button and share this video to your friends, and please subscribe to my YouTube channel if you haven't already. I'm Gregory C. So I'll see you next time. Goodbye.